Morning, Steve Free in Chicago with the morning grain comments. We have a mixed trade overnight. Beans are down about 4 cents, while soybean oil is trading below 62 cents a pound. Meal's up $1. Nearby corn's up 3 cents, while Chicago wheat's up 4. Kansas City's up 4, and Minneapolis is up 7 cents. Outside markets fairly quiet. We did see globally in cash, we saw canola prices rally on concern about the Canada crop. Palm oil, kind of mixed. The Dalian palm oil futures were higher, but Malaysian palm oil futures were lower. We're still looking at negative soybean crush margins in China, but they are improving. As far as the weather is concerned, right now we've got some light showers moving across Iowa, parts of northern Missouri. Those will probably diminish. The big event is over the weekend, and whether or not parts of Iowa, Minnesota, Wisconsin, and northern Illinois get somewhere between a quarter and maybe 1.5 inches of rain. After that, it looks somewhat arid and warm. 6 to 10 day and the 8 to 14 day maps have below normal rains and above normal temps. We would expect crop ratings next week to show maybe steady to maybe a little bit of a decline in the west, and maybe some improvements where they're getting some rains, especially in the south. We also will be looking at export sales today. Again, corn and bean new crop sales are slow, and they're probably behind the pace that the bulls would like to see them. Wheat's kind of in line, but our wheat exports are forecasted to be down from last year. And we also noted that there is concern about the quality of the European wheat, and Germany lowered their crop size due to a wet July. We're still seeing low wheat numbers out of Russia and low numbers potentially for Canada wheat and canola. Still dry in Brazil and Argentina, which is posing more logistic export problems for Argentina. We did hear a couple of rumors floating around that China might have bought a couple of cargoes of soybeans out of the Pacific Northwest, but nowhere near the pace that's needed to make 100 million tons of global imports next year. We also are waiting for some kind of announcement that they recently bought a small amount of U.S. corn. But with the Brazil crop down and their exports down, we would expect that pretty soon consumers are going to have to come in and start buying corn. Domestically, we would expect in the month of August, U.S. corn crushers and bean crushers taking some downtime due to the lack of raw material supplies. We also noted yesterday crude oil traded lower on the fact that inventories rose in the U.S., suggesting that the spread of the Delta virus may be slowing demand. We'll also be watching a private estimate of the U.S. crop. When we look at prices, it's all up to size of the U.S. crop, maybe what the USDA says next week, the demand for U.S. corn and bean and wheat exports, and also just what happens as far as harvest pressure and then just globally, what do the stocks do versus where they are now. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.